Okay, folks, welcome to the week ahead commentary for Saturday, March the 19th. Okay, so our strategy for last week was while people were buying, we were closing out positions. So we closed out Facebook, we booked profits there on our Strangle trade. We had sold premium, very expensive options. Those options have deflated in value, enabling us to lock in profits, move to the sidelines as the risk on trade came back and fear has left the market. We also saw LABU rip this past week. I mean, I absolutely love the chart, but I tried to resell or roll up, I should say, the 1250 strike put options that we had sold to a 14 strike, couldn't get hit. It was horrible pricing. So nobody wanted to sell puts for a reasonable price, so I walked on it. Ideally, we get a pullback next week, and then we could either look to A, buy the shares outright, or B, those options would become reasonably valued where we could sell them for a reasonable price. So we are in a position yet again where we're going into a new trading week loaded up with liquidity. We are not leveraged. And now what's going to come down to is whether or not this rally that we saw last week has legs, or is it a dead cat bounce in a bear market. Now these rallies, they have the feel of a bull market because they're so ruthless with the shorts covering, but then they come to an end. Now, what we want to ask ourselves is this. When this sell-off began, has anything changed? So to talk about that for a moment, we peaked out back here in January, early January of 2022 on the Dow Jones Industrial Average. There was no Ukraine-Russia issue back then. Equities were overvalued. Inflation was on the rise. COVID was a thing. So I guess we could say that is off the table. However, that gremlin Fauci was out this past week talking more about lockdowns. So he's chomping at the bit to get his face back out in the spotlight. So what has changed? Is inflation under control, or is it on the rise? Well, it's on the rise. So I don't want to be a doom and gloomer here. I want to be a realist, and I want to say, let's be careful, because stocks, which have been very expensive, are more expensive now than they were the prior week here. So stocks are not cheap, especially growth stocks. Let's get to the bond market first. We'll come back to equities. So we've been watching the yield curve. And for those not familiar, yield curve is predicted every recession with the exception of one since 1955. And when you invert, meaning 2-year Treasury yields pay out more than 10-year Treasury yields, Houston, we have a problem. So you saw that in each of these gray areas here. The last one being COVID. Here we are yet again. We are right there. We are threatening an inversion of the yield curve again. All the while, equities are expensive. Inflation is rallying. So let's take this into consideration. While equities were rallying late last week, the yield curve was dropping like a rock. Yields, 10-year yield, broke out last week. Yes, we closed off the highs of the week, but we have a crisp and clean breakout, and we have a two-handle. Mortgage rates are extremely high relative to recent years. The TLT, 20-year bond ETF, continuation breakdown last week. We did reverse to close off the lows of the week. We were down on volume, oversold on Stokes. So it looks as though we may get a rally here, maybe a pullback on yields. That'll allow more upside potential for growth stocks. The tips, weekly chart. A down week. We bounced off of support, still closed down. Volume was significant. You can see that the moving average in red has been rising of late. So we had fairly significant volume last week. Daily chart. Yeah. So we had a reversal bar on Friday. Volume was light. It looks like all we've done is return after this breakdown here. Return to a trading range. I could just throw up a line here. And there you have it. Here's the peak of your trading range. Not much to talk about here. The dollar. Okay, so a lot of conversation last week about the petro one. Geopolitical fear came out of the market into equities. What happened to the dollar? It declined by nearly a percentage point. It is certainly not broken. Let's go to the daily chart. We were up on Friday. A little bit of topping action. We sold off the highs. Stokes are breaking down. We have a lower high, lower lows. MACD went negative. So as this Ukrainian narrative begins to wear down for the politicians, they're going to have to come up with something else to distract us, like a diamond jig to a barracuda, so that we're not focusing on them and what they're doing over in Washington, D.C. So just because Ukraine may slip to the background a little bit, expect something else to emerge. It's just been the trend of late. BLM was a couple of years ago, then it was COVID, then it's Ukraine. What's next, especially as we near the midterms, because the Dems are poised for a wipeout. They need a new narrative, and they need a strong one. The fact that they're building up U.S. troops in Europe does not make me feel comfortable. So while I believe that the Russians are going to try to bring the Ukrainian issue to a standstill or to a halt fairly soon, that doesn't mean that we're going to allow this opportunity, and I say that tongue-in-cheek, this opportunity to slip through the hands of our politicians to be able to capitalize more out of demonizing the Russians, and God forbid we make a stupid move. The VIX weekly chart. And when I say politicians, I don't want to be political here. I'm talking about both Republicans and Democrats, a pox on both of their houses. Let's just put that out there. I'm not on anyone's side over in Washington. The VIX crushed last week. We still closed with a 20 handle. Now, we kind of knew this was coming because daily chart, we saw on the Stokes these lower highs. We're losing momentum on Stokes, and it looks as though we could go lower. Stokes are oversold. We're going to get a bounce here soon. So keep this chart in mind as we talk about equities and as we go into strategy for the new trading week. The Dow Transports, an amazing week last week, up nearly 8 1/3% on the week. A clear breakout. We were stalled at resistance. Volume was good. So as go the transports, generally so goes the overall market. Daily chart. Now we were down a half percentage point on Friday. We gave up one support level, held another. Volume was very high. Stokes are very overbought. So let's see whether or not we get follow through here. It's all about the follow through. It's what we want to see are pullbacks, higher lows get put in. And to me, this is not a pullback and a higher low. This is just an oversold pullback as we rallied through the two standard deviation Bollinger Band in green, and we just simply pulled back, alleviating that overbought condition. And then as we get the pullbacks, we want to see breakouts to higher highs. The Dow Jones Industrial Average. Stokes, I don't know. I don't trust them. Look what happened back here. It's the same setup back in early February. We hooked up, we rolled over. Great candlestick, but we also had a great candlestick here, right? We rallied, faded into resistance. We're probably going to do the same thing at the same resistance level. Yet again, the question is, do we hold it? Do we hold the breakout? RSI closed with a 50 handle. That's bullish. Volume was bullish. So we're open-minded. We just don't want to hope when we should fear. Stokes are very overbought. Expect a pullback here in short order. Look at the volume on Friday. Beautiful volume. The S&P 500 weekly chart. We broke out last week. You saw strong buying into the close. The Stokes look good, but we need to see a higher high. We continue to put in lower highs and lower lows. We need to see a breakout above the week of the February the 7th highs on Stokes. If we close there, it's game on to the long side. ADX double top, red, double bottom, green, bullish. This rally is very stretched. We need to see a pullback here and a higher low. Got to have it. We broke out on price. We closed above the 50-day moving average for the first time. When was the last time? It's been a while. This year. This is the first time in 2022 that we've closed above. Actually, no, right back here we closed above it. January the 11th. Okay, so I stand corrected. Beautiful volume. Beautiful volume. And this is what concerned me on Thursday, was that there was declining volume that was resolved on Friday. That's good stuff. Small caps. Beautiful bullish reversal bar. We broke out on Stokes. RSI broke out. Volume was average. It was good. MACD, long in the tooth. Looks like we're going to go positive soon. Daily chart. RSI, breakout. Stokes, breakout. Price, breakout. Volume, breakout. Nothing not to like here. The triple Qs, weekly chart. I'm not loving these Stokes. They remind me of the devil's horns. Here, you got the hook up. We pulled back. We never went underneath 20. We haven't broken out yet. Well, I need to see a close above the highs of February the 7th. Very important to me. Now, we also want to see a pullback and a retest, of course. I'm going to keep saying that. We need that. It's a validation that this rip is simply not a dead cat bounce in a bear market rally. Volume, awesome. Daily chart. We rallied up and into the 50-day moving average. When was the last time we were above that? Back here, January the 4th. Volume, very high. So a very strong rally this past week for equities. But I'm gonna pour water for a moment on my bullish commentary so far. What has changed? Why the rally? Were we technically oversold? Well, you can make that argument. We weren't deeply oversold. I think it was a mixture of, one, the Federal Reserve didn't rock the boat. And I think that the markets are already pricing in a Federal Reserve that raises a couple of times, and then if a catastrophe hits economically with the yield curve inverting, I think the markets are frankly taking that and saying, okay, what are they going to do? They're going to hike rates aggressively into a recession? I don't think so. I think what they're pricing in is the fact that as we enter recession, there's going to be what you call demand destruction, meaning money will stop flowing into discretionary items, or at least slow down, but it will continue moving into food and energy as food and energy prices make up a greater proportion of the consumer's budget. So that car that people may have been wanting to buy, or that dryer that they've been wanting to buy, durable goods, well, they can't afford it anymore. So that'll reduce the pressure on the supply chain to produce more cars, more dryers, etc., because people just don't want it. It's demand destruction due to higher food and energy prices. And that may just allow the Federal Reserve to get away with aggressive rate hikes. I think it's pie in the sky they're going to raise 6, 7 more times this year. The banks, a very good week. This is a beautiful flag formation. As a matter of fact, we booked profits on our Goldman Sachs put trade. We rolled it up to a new strike. We're up about 27% on the put side. The call side has given us a little bit of trouble, but we have time decay there, so we're good. We're going into the 14th, I believe, of April, and we're far away from the money on the strike, so I'm comfortable. All right, so the banks, strong price action last week. Stokes still declining. That was volume. Volume was very good. Daily chart. Stokes are very overbought. We were stopped at the 50-day moving average last week by 2 cents. Volume was good. Technology, outside reversal bar, bullish key reversal bar, call it what you want to call it. It looks good. It's certainly a breakout. But what we want to see here is a retest. Again, I'm going to keep repeating that. Retest. Well, that means for people watching this on the replay next week is this. This line in blue has acted as resistance. Will it now act on a pullback as support? That's a key question that must be resolved. And if it appears poised to hold that support level, well, then we act. And it's not just on the XLK. We could apply that rule to every single chart we've discussed, where we saw a breakout last week on a weekly time frame. Daily chart. A very good day. We rallied up and into resistance. Stokes strong. RSI strong. Volume good. Very nice. The semiconductor space. Again, another sector where we saw a breakout last week. Now we want to see a pullback. And we're going to get it. Great volume. Daily chart. So here's your, air quotes, bearish crossover of the 50-day crossing down below the 200-day moving averages. So will the 50-day moving average act as a declining ceiling? Probably. Now, what I'll tell you is that if we, on these charts, here's the S&P 500 again, if we give up the 50-day moving average again, it's going to be a major, major tell that there's simply not enough rocket fuel to keep this rally going. Energy took a pause last week, but that was expected. We were extended. We did rally off the lows of the week. Volume to the downside was high, so we may get more of a pullback next week or sideways consolidation. Daily chart, not a bullish chart. It looks like we may have another lower high. Down volume is light, so we're neutral here. Stokes are trading down below 50s. Rallies tend to fade. We know that, so therefore we avoid until these Stokes are resolved. Natural gas was up last week. Nice bullish key reversal. This is on the watch list. So let's keep an eye on natty gas. This may move up higher. And when this moves, it really moves. Volume was light though. Oil, down nearly 2.3%. We did rally off the lows. We held the 200-period moving average on a weekly chart. The 50-week and the 20-week moving averages are playing catch-up. Daily chart. Again, it looks as though we have a lower high here. Very, very light volume on Friday to the upside. So big, big question mark on whether or not we're going to get a continuation move here. We may just vacillate, consolidate gains. Emerging markets, the dollar pulled back, emerging markets rallied. We know there's an inverse correlation. This is very bullish. Very strong price action. We did not close above support. We closed right at it. Volume was strong. So this is one where we could sell puts against this position. Stokes were finally at oversold levels. Last time we were like this was back here in December, and we had a nice rally. Nothing major, but a good rally. Daily chart. Strong day on Friday. How was our volume? Volume was very good. So money is rotating into emerging markets as well, folks. Let's acknowledge that. We've talked about that. That's leg 2 of our strategy, is to take money out of U.S. equities and invest in international names, such as Indonesia, which we own. I'll go over that chart in a moment. Gold, monthly chart. We're off the highs of the month considerably. We are still above a breakout point, but we really do need to see a rally back here. And volume is horrible. Ultimate oscillator is rolling over here. I'm not going to speak my book. The monthly chart is not wonderful. Weekly chart. We see close down below 1900 on gold. There's a problem out there, a major problem. And I kind of warned about this. You start seeing geopolitical risk come out of the markets. Well, it's going to be precious metals and the U.S. dollar that get hit the most, along with bonds, U.S. treasuries. So this is a clear picture of how much fear was built into the gold trade. Now, I do not believe for a second that the rally in gold is over longer term, because there's certainly a transition on to get away from the U.S. dollar, and we did it to ourselves. To be fair, it was underway, but we expedited the process with our sanctions lately. Our gold mining trade doing well. GDXJ, gold was down last week, and yeah, GDXJ was down as well. We rallied off the lows of the week, very strong. We held support. This is a retest of a breakout point. Bullish chart. We're going to stay long. Nugget, same deal here. We closed down, but we closed off the lows of the week. Daily chart. Doji star formation, sign of indecision. We don't know which way this is going to go on Monday morning. No idea. Volume was light. I'll give the odds to the upside. Gold money, weekly chart, bullish key reversal bar. This is a buy signal. We got a higher low. That's a buy signal. SILJ, our silver mining trade, Doji star formation, just like NUGT, sign of indecision. I'll give the odds to the upside. We have some topping action here on the daily chart. I'll still lay odds to the upside, but I'm concerned about the topping action. I would not go buying more. Silver, weekly chart, a down week, down over 8.5%. So let's just be careful here. Daily chart, we broke support. No reason to go buying here. We want to buy on recaptures of support, not breakdowns. Cal-Maine Foods, chart of the week, no doubt about it. This has got to take it. I posted an article in the forum about demand for eggs There's some sort of a flu out there. So egg prices are increasing. And Cal-Maine Foods, well, this is our little egg company that could. Weekly chart, we're very overbought here. This is the third standard deviation Bollinger Band. It's no joke. We're overbought. I think we are going to go higher. Volume was awesome. Daily chart, we're very extended here. RSI is well above 80, but I still think that we could see RSI above 90. But what we need to do here is trade sideways, consolidate, and then make that next move up higher, because this is unsustainable. Look at the volume. This is what kept me long and not booking profits, is the volume. MACD histogram still strong. So I took some risk. I'll admit that. Stayed long. I would not short this. OPTT up over 1.33% last week. Bullish reversal bar on the week. Looking okay. Possible higher low. Daily chart. Bearish reversal bar. Got resistance above. No rush here to get involved. I mentioned earlier about our investment overseas. Indonesia, second fastest growing economy. I haven't spoken about this much. Weekly chart, continuation breakout last week. Daily chart, we're consolidating after getting overbought. Expect a continuation move up higher, especially if the dollar breaks. Uranium weekly chart, bullish key reversal bar. Looks as though we are popping up higher in the next couple of trading weeks. With that, folks, I'm going to send out a best stock charts under a separate video. Till then, I will talk to you later. Be well.